A currency trader talks about how to trade the British Pound-Swiss-Franc currency pair. A currency trader talks about how to trade the British Pound-Swiss-Franc currency pair. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis. Guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW24 traders, and our website is www.stochastic-macd.com. The British Pound-Swiss franc currency pair. How to trade the British Pound-Swiss franc currency pair. All right. The first question that we must ask is who should trade the British Pound-Swiss franc currency pair. All right. Who should trade it? All right. If one wants to trade the British Pound-Swiss franc currency pair, one must understand the characteristics of the British Pound-Swiss franc currency pair. All right. If one does not know the characteristic of this currency pair, one is likely to make trading mistakes. All right. The British Pound-Swiss franc currency pair is a very volatile currency pair, a currency pair that is moving very, very fast. It is not for new traders, it's not for beginners traders, all right? It is for advanced Forex trader, all right? Are you an advanced Forex trader, all right? If you are a new trader, you should stay away from the British Pound-Swiss franc currency pair because it is a very, very volatile currency pair, all right? So in order to trade the British Pound-Swiss franc currency pair, one must have, a competent skills, a Forex competent skills to trade volatile currency pair, all right? So I do not recommend the British Pound-Swiss franc currency pair to new traders, for beginners traders, for traders that are struggling to day trade or to swing trade. All right. The reason is if you start trading the British Pound-Swiss franc currency pair as a new trader, as a trader that is having a lot of difficulties, you are likely, to give away a lot of money. And we don't want you to do that. We want you to save your money in your bank account. All right. This is very, very important. So before we continue, I need to stress on it. If you are a beginner trader, you are a new trader, or you are somebody struggling to trade Forex, do not trade the British Pound-Swiss franc currency pair. If you are an experienced trader, you are an advanced trader, you are a professional Forex trader, you can trade the British Pound-Swiss franc currency pair. All right? Now, who should watch this video? All right? Somebody who wants to learn to trade volatile currency pair like the British Pound-Swiss franc currency pair. All right? So we have clarified who should trade the British Pound-Swiss franc currency pair. What are the characteristics of the British Pound-Swiss franc currency pair? It's very volatile. It's a currency pair that is trending all the time, very often, all right? It is a currency pair that is moving very, very fast. So if you do not know how to manage the trade, or you don't know how to time the trade, and you enter the trade at the wrong place, you are likely to be taken out of the trade, all right, very fast, because this currency pair is moving very fast. But do not worry. If you are somebody who wants to learn to trade like a pro, I will share with you a few tips and tricks that you can use, when you are ready, to trade the British Pound-Swiss franc currency pair, all right? How do we trade the British Pound-Swiss franc currency pair? Because it's a very tricky currency pair to trade. It is very volatile. It's moving very, very fast, It's trending very often. We must use, trending tools. All right. So whenever you see a currency pair or a financial instrument that is very volatile, that is moving very fast, you must use, okay, a trending technical indicators. The number one trending technical indicator is MACD and also moving averages. Also, we can use, okay, channels, the rising channel, the declining channel, and the horizontal channel. Stay with me because I have more tips and tricks to share with you in this video. This will help, okay, your day trading and also your swing trading. All right. So the British pound Swiss franc currency pair is generally a trending currency pair. It is also a volatile currency pair, and it's also moving very, very fast. So if we get into the trade at the right time, at the right place, we are likely to be rewarded. All right? And on the other hand, if we enter the trade at the wrong place, at the wrong time, we can quickly give away money. But we don't want to give away money. All right? So we can use trending tools like MACD, all right, moving averages, channels to trade any volatile, moving fast financial instrument. All right? Now, so when we see a signal we want to buy, all right, anytime you are trading a volatile currency pair, because you don't want to lose, you want to win. Because you know that this currency pair is moving very fast, you want to concentrate only on high probability trade setup. Now, I need to repeat this again. If you are trading any volatile currency pair or any financial instrument that is volatile, that is moving very fast, like Google stock, like Apple stocks, like the pound yen, like the British pound Swiss franc currency pair, all right? We want to take the signal, we want to concentrate on high probability trade setup. So we want to know the high probability trade setup. All right? So the best bullish high probability trade setup will take place at a valid support levels. Okay? The bearish high probability trade setup will take place at a valid resistance level. So the first thing that we want to check is to know, okay, the key support and resistance level. Without that, we can make a lot of mistakes. So if we want to trade this currency pair, the pound Swiss franc currency pair, the British pound Swiss franc currency pair, and we see a bullish signal, we want to have a backup. We have to have a solid foundation. We want to have a solid support, a valid support, a reliable support, a viable support, okay, that can back our bullish trade. So we cannot just go and buy a volatile currency pair or the pound Swiss franc currency pair anyhow, anywhere. So the place where the signal is taking place, we must, okay, check it carefully that the bullish signal is taking place at a valid support and resistance level. On the other hand, if we receive a sell signal and we want to buy any volatile or a financial instrument that is moving very fast, we want to sell it at a valid resistance zone. So we want to know where are the support and resistance level. When we can go to the yearly chart, quarterly chart to highlight those key levels. Without those key levels, we are likely to get into trouble. All right? So pay attention carefully. So though this is about the pound Swiss franc currency pair, we can apply this strategy for stocks that are volatile, the Google stock, the Apple stock that are moving very fast. We can apply this for commodities that are moving very fast, silver, gold. We can apply this for the pound yen, for the British pound Swiss franc currency pair in this case. And we want to take bullish signals that are taking place at a valid support and resistance level, bearish signals that are taking place at a valid resistance zone. But we will go to the yearly chart, the best key support and resistance level, we will find them on the yearly chart. It makes sense? It is also powerful. So Once we see a valid, we see a bullish signal, we want to ascertain that the signal is at a valid support level. We see a bearish signal, we want to ascertain that the signal is taking place at a resistance zone. But why do we need to do that? Why? Because the professional always buy at a valid support zone and the professional always sell at a valid resistance zone. So what we are trying to do in a resistance zone, why we see a resistance? When we see a resistance, what a resistance is telling us? A resistance is telling us that somebody has sold the financial instrument at that level. That's why the price went down. So there was a demand to sell the financial instrument at a specific price. And the market does not forget those levels. So when we see a support level on the yearly chart or the quarterly chart or at least on the monthly chart, it means that this level, somebody or some people have bought the financial instrument at that point in time. The price was going down. As the price hit that level, there was a demand to buy the financial instrument. So we are working with the past to forecast the future. Somebody has bought at that level. As the price returns back to the same level, we want to monitor whether there is still a demand to buy. Okay, somebody has sold it at a resistance level, prior return back to the same resistance level. We want to monitor again whether there is a demand to sell. If, my friend, pay attention, if the price goes above the resistance level and find a support, we can buy it. On the other hand, if the price dip below a support level and find a resistance below the support level, we can sell it. Why the price will go below its support level? Because there is no demand to buy. As the price dip below it, there's no demand to buy. Now it tried to go above it by finding resistance. People are selling now at a support zone. So that support level is converted now into resistance level. Let me show you this, okay? Pay attention. So this is a support, okay? So why it was a support? Because some people were buying here before. So price was going down. As the price hit that level, it found a support and went back up. All right? Price returned back to the same level. There is still demand to buy. People buy it again. So it is a support because the price is finding it difficult to go below it. Not only that, the truth is that there were orders here to buy. So people are buying at this level. But suddenly, the price dip below that support level. Why the price dip below a support level? Because there was no demand anymore. So those who were buying here are not buying anymore. So we need to watch it. Okay? Don't just sell straight away. Wait. Okay? Now price return back to the same level. All right? Instead of people buying it, so price dip below it, telling us that there's no demand to buy. Now price return back to the same level. So first time price returns that level, which is here, there was no demand. It went below it. So we are patient. We say, okay, give us confirmation. So price return back to the same level. We want to know whether people want to buy it. If people want to buy it again, you see that the price will return it back above the support level. But if they want to sell it, this is what I'm talking about. The price will find a resistance there and we start going in a declining channel. Here, we will look for opportunity to sell because first test, the price fell to find a support. Now, it went back to the same level, is rejected for the second time. This is a bearish trade setup. The opposite is also true. Price goes above, okay? Price was finding the resistance, okay? Before, so this is the red line, resistance level. Many times, price goes up to that level. Somebody is selling. There is a demand to sell. There is a distribution taking place. Now, for one reason or another, price breaks above that resistance level. So why is he telling us? First time he breaks above it, he's telling us that there is no demand to sell anymore. But we will wait for confirmation. All right? Wait for confirmation. Price return back to the same level. All right? If there is a demand to sell, the price will be below the red line. But if there is no demand to sell again, the price will find a support. So first time it went above it, it's telling us that there is no demand to sell. Now if find a support, it starts changing direction going up. We want to buy instead. So when you are trading a financial instrument that is very difficult to trade, that is moving very fast, that is volatile, all right, like the Pound-Swiss-Franc currency pair, like the Pound Yen, like Google stock, like Apple stock, or any financial instrument that is volatile, we need to trade around key levels. If we see a bullish signal, we want to ascertain that a bullish signal is taking place at a key support level. All right. If we see a bearish signal, we want to ascertain that the bearish signal is at a resistance zone. But I also just explained to you that there is a time when we can sell at the support level, which is what I showed you just now. I don't want to repeat myself. And there is a time when we can buy at a resistance level, which I just showed you now. I will not repeat myself again. So because, my friend, the Pound-Swiss-Franc currency pair is very volatile currency pair, and only advanced traders and professional traders should trade this currency pair. So one of the mistakes that I was making first when I start trading fast, I'll open my chart, and I will be trading all sorts of currency pair. But I do not understand the characteristic of this currency pair. I was just trading them because there was a signal, and I just want to buy or sell. But when a trader finally study or try to specialize, okay, in trading a specific financial instrument, he or she would like to know the characteristics of the financial instrument he or she wants to trade. In this case, we are talking about the Pound-Swiss-Franc currency pair. It is volatile, it's moving very fast, it's trending most of the time. If we want to trade it, we want to trade it around key levels, support, and resistance level. The first thing I've said to you before, if we see a signal or a trade setup, we want to concentrate only on high probability trade setup. So talking about, a currency trader talks about how to trade a British pound Swiss franc currency pair. Who should trade it? Advanced traders, professional traders, more experienced traders, okay? What are the characteristics of this currency pair? It is volatile, moving very fast, it's trending most of the time, okay? How do we trade it? We are looking only for high probability trade setup. So if we do not see a high probability trade setup, we just walk away and let other crazy traders trade it. Because it is a very risky currency pair. We don't want to trade, we don't want to focus on any useless, trade setup. So the first thing that we must always concentrate on is what? High probability trade setup. Now, when we see a high probability trade setup, all right, my friend, we will now, if we wait for the signal, we receive a signal, what are we looking for? We want the signal to be at a key support and resistance level. So how to trade it? We are trading only high probability trade setup. What type of signal are we taking? We are taking only bullish signals that are taking place at a key support level. What are we? When can we sell? We can only sell when we see a valid signal at the key resistance zone. My friend, you understand? High probability trade, support and resistance level. Bearish signal only at a resistance zone, key resistance level. Bullish signal only at the key support levels. My friend, you need to get it right because you don't want to get it wrong. All right? It's better to stay away instead of jumping into it, all right, and get into trouble. And we don't want to get into trouble at all. Okay? We want to save our money. So I also explained to you that because a currency pair like this, so I'm talking about support and resistance level, you may say to me, George, show me one example, okay? So this is the Pound-Swiss-Franc currency pair on the yearly chart. I will go now to the daily chart. Pay attention to this line here. Pay attention to the green line here, 15090. That's the low of 2008. It's a key support level. Watch it here, all right? I also explained to you that a support level can be converted into resistance level. You remember my drawing here? Don't forget that, because I don't want to repeat myself, otherwise the video will be too long. All right? So pay attention to this key level. This one here, 15090. That's the low of 2008. It's a very important key level on the yearly chart for the Pound-Swiss-Franc currency pair. Let's go now to the yearly chart and let's see what has happened around the green line. This is my green line here. You see here? See how the professional were trading this currency pair carefully along the green line. They sold it here, so prior went below it, retested here, found a resistance, they sold it down. Prior returned back to the same resistance, to the same key level. Okay, you see here, they sold it a little bit. Now it went above it. When it went above it, remember what I said to you, it became a support. Now it changed direction here, so they start buying on the edge of the green line. You see how they are trading this currency pair? On the edge of a key level from the yearly chart. Carefully, because you don't want to risk it. Okay, you want to get it right at the best place. You see now, a consolidation that is taking place near the green line. Now here, there was a change of policy from the Swiss bank, all right? A change of policy because they were capping, the Swiss franc against the euro, and they have reversed their policy. And here we see, the reaction, the price dropped down big time. Were you in the market at that time? Or how the economy news can change the dynamics of the market. So let's leave this one alone. Here again, price D below the green line. Look what the price did. Return back to the same level. Somebody sold it, you see? Somebody sold it above it, went below it. Telling that the support has failed. Remember what I said to you. The support has failed. Now we are waiting for confirmation. Here it is. It come back here. This is our bearish trade setup. We don't assume that the price will change direction here. We use what we call a top-down trading method. All right? Here again, they sold it. Now, this is where we are again here. We leave found a resistance here for the second time. We will not guess it, okay? Do not guess it. Use a top-down trading method. So, we are on a daily chart now. You use this as your trade setup. You see here the price, here you see move a bit away from it. But when he was here, you use your daily chart as your trade setup. You go to the higher time frame to validate your setup, and you use another time frame, for instance, hourly chart for your signal, and you may use a 5 minute or 3 minute or 50-minute chart, for your entry point on the edge of a key levels, because you understand what is taking place here. So, my friend, you see the green line, what was happening along this green line. This is the low of 2008, and the professional know it. That's why I say to you that only advanced traders, experienced traders, professional traders, should trade, a volatile, currency pair like the Pound-Swiss-Franc currency pair. It makes sense now? It makes sense? Because it is very volatile and it's moving very fast, and you don't want to, trade it anywhere and anyhow. All right? Let's go back again to the yearly chart. By the way, if you have any question, put it below, in the comment section, and I will get back to you. So, what have you said so far, So, who should trade it? Advanced trader, experienced trader, professional trader. Great. So, let's move away from that, What are the characteristics? It's volatile, it's moving very fast, It's trading very often. It's difficult to trade it, all right? So how do we trade it? We constantly, what are we looking for? So when we want to trade this, we are looking at our chart, we are looking for high probability trade setup. If we do not see a high probability trade setup, we just run away. We don't want to trade it. When we see a high probability trade setup, and we are now waiting for the signal. They set up the signal and low risk entry point. This is what we call a top-down trading method. So when we see the setup and we are waiting for the signal must take place at a key support and resistance level. It makes sense? It is also powerful. The tool that we can use for a volatile or a currency pair or any financial instrument that is moving very, very fast, like Apple stock, these are trending tools. The best trending tool are the market pattern, the rising channel, okay, the declining channel, and the horizontal channel. These are the tools that we use. We also use moving averages, but the best tools are the three market pattern, rising channel, declining channel, and horizontal channel. But you know what, my friend? The biggest trading mistake is the violation of the market patterns. Do you know that? But there are other mistakes trader makes also. So a trader may be, okay, aligning, okay, his or her strategy with the market pattern, but maybe violating the top-down trading approach. Or a trader may be aligning all strategy with the market pattern, but maybe ignoring, okay, the market environment. I will talk about trading mistakes in another video. So the best tool that we can use for this type of volatile currency pair are the three market patterns, the rising channel, the declining channel, and the horizontal channel. Do not forget, when you are trading any volatile financial instrument, you don't want to repeat the biggest trading mistake, which is the violation of market pattern on any time frame. So because, let's go now, okay, because right now it's not trending. You can see that on the yearly chart, it's not trending as such on the yearly chart, okay? But I want to show you what has happened today, okay? All right? I will show you now how this currency pair is moving very, very fast, okay? Very, very fast. All right? Let's go now to the 2-hour chart, one of my favorite time frames. This is today. So today is the 27th of July, 2015, okay, July 27th. This is Monday here. Okay, the time in London is 59 minutes past 6 p.m. In New York, 59 minutes past 1 p.m. So you can see today it went up more than 170 pips. Very fast. You see how? It just trend. This is today, you see? So you want to get here. You see how it went fast? Boom, 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 boom. Here it is now. 170 pips, very fast. So if you get it right, you will be rewarded very fast. If you get it wrong, you will also know very fast. Another thing I need to mention to traders who are new, who are beginners, or who are struggling with Forex trading now. A lot of the margin requirement for this currency pair is also high. So as soon as you enter the trade, you may see a big loss straight away because the margin requirement is quite high. So check with your broker how much you will pay straight away as soon as you enter this trade. All right? So that's why we do not encourage new traders, beginners traders, or traders that are struggling, okay, to trade this currency pair because the risk is quite high. But for somebody who wants to learn to trade the British Pound-Swiss-Franc currency pair, these are the things that they need to know. That's why we are discussing here. All right? So how do we start? So you want to trade it? How do you start? Okay? Where do you start? Okay? If you are using the TC2000 charting software, you will start from the yearly chart. You see here, I have highlighted 3 key levels here. Because 2008, why I'm highlighting the 2008 candlestick bar, because in 2008, something important has happened in the financial market. We have, okay, the bearish season, okay, the financial crisis in 2008. Do not forget, okay, 2008. So the high of that year is a key level that professionals know. All right? The media line of 2008, the professional paying attention to that level. The low of 2008, as you have seen it now, you see on the daily charts I show you, is not by mistakes, okay? All the reaction of the price along this green line, that's the low of 2008. You see, they know where they should trade it. That's the low of 2008. So if you want to trade it, You need to go to the yearly chart. If you don't have the yearly chart, you have the quarterly chart. Go to the quarterly chart. Highlight the key support and resistance level. Otherwise, you will be trading blindly. Okay? If you don't have the quarterly chart, I feel sorry for you. Well, you have to use the monthly chart. But I will never use any charting software that is giving me only the monthly chart without the yearly chart. I don't want to use them because I will be missing so much information. Okay, that's my own view. Okay, I'm not saying to you that okay, that's my personal view. All right. So the high of 2008 for the British pound Swiss franc currency pair is at 20811. The low of 2008 is at 15112. 15112. The median line of 2008 is on or near. This is not the exact level. I need to mention it to you. If you want to calculate the exact level, you have to use the high, okay, minus the low, okay, divided by 2, all right, plus the low. That's how you will calculate the median line. But the level that I'm going to tell you now is not the exact median line. It's somewhere near the median line itself. So, all right, so my median line that I'm giving you now, that's not the exact median line. It's at 17837, roughly, all right, remember, roughly 17837. That's my orange line here. You can calculate the exact median line, okay? There's another level that we need to watch. So apart from the 2008, these are the key levels that the professionals are monitoring. Okay? We can also project. You see, we have a bigger channel here that is highlighting the range. We can project that range to the downside. So I will divide it into 2. We can project it to the downside. You see? Are you with me? All right, project the half of the channel to the downside. We don't want to confuse traders. Let's move on. Okay. Another key level that we need to know, because we are now in 2015, know the high of last year, the low of last year, 2014, and the median line of 2014. You must know it. So the high of 2014 for the British pound Swiss franc currency pair is at 15536. The low of the British pound Swiss franc currency pair in 2014 is at 144, okay, 67, okay? The median line that I'm going to give you now is not the exact median line, all right? Remember, it's not the exact median line. You can calculate it yourself. It's at 15090, roughly 15090. These are the level that the professionals are watching. Remember, the median line of 2014 is somewhere near the low of 2008. So the green line here that we see is almost equal to the median line of 2008. It's not the exact median line, but it's somewhere near the median line of 2014. That's the low. This is the low of 2008. Is almost equal to the median line of 2014. So these are the levels that we are watching. So where is the price now? So after drawing those key levels, now the next thing that we want to know, where is the price now? So what is, okay, how do we put this? The current, okay, key level that we must monitor, because we don't want to watch this level now because the price is far away from it, but we want to know it, okay? The median line, you can see that the price is not near it. So what is the current key level that we must monitor? The current key level that we must monitor are the high of 2014 because the price in that region, the low of 2014, and also the median line of 2014. So the high of 2014, 15536. The low 14467, and the median line somewhere near the 15090. So roughly, if I draw it now on the chart, suppose I want to day trade or swing trade this currency pair, the current key levels that I must watch, my friend, This is how you can trade any volatile currency pair. Whether you are trading the pound yen, you are trading, any volatile currency pair, like the British Pound-Swiss-Franc currency pair, or you are trading any stock that is volatile, like Apple stock, okay? This is how you will trade it. The current key levels. See the high? So I can color them now. Turquoise, the high, and then I'll color the low into pink, all right? To please the beautiful ladies. All right, so you see now, so these are the three levels, so the turquoise, the green, and the pink line. So these are the level that the price in that region now. So these are the current key level that we must monitor. Remember what I said to you before. If you want to trade this currency pair, all right, you require more experience. You must be an advanced trader or a professional Forex trader. It is not for new traders. It is not for traders that are struggling, and the margin requirement is quite high. It's a very risky currency pair. The purpose of this video is to show traders how one can trade the British Pound-Swiss-Franc currency pair, a currency pair that I like to call the beast, because it's moving very fast and it's also volatile. It's quite challenging even to some experienced traders to trade this currency pair. But if one wants to learn how to trade the British Pound-Swiss-Franc currency pair, these are the steps that one should follow. Concentrate or focus only on high probability trade setup. Take only signal that are taking place on or near key levels. Bullish signal near key support level, bearish signal near resistance level. One must not violate the market pattern. The tool that we want to use are the three market patterns: the rising channel, the declining channel, and the horizontal channel, the moving averages, and the MACD. Because it's moving very fast, it's trending very often. It makes sense? But we can go on and on and on and on, my friend. So this is just part of the piece, because we are talking about the trading deal, the setup, the signal, and the low risk entry point. We also talk about when we see the setup, we validate the setup, and then we wait for the signal on another time frame, and the entry point. Now, let me clarify this. A lot of traders sometimes will go and buy a trading system which we sell, okay? But a trading system does not trade for traders. This is one thing traders should understand. Traders use trading system to trade. Now, not all traders have the same level of understanding or trading skills. So you may give the same trading system to 4 or 5 traders, and you will see a different result. What I will say to traders at this point in time is that take time to learn to trade, all right? So in order to learn to trade, one must understand, okay, what are the biggest trading mistakes that one is making. The first biggest trading mistake is the violation of the market pattern, okay? Another bigger trading mistake is what? The top-down violation of the top-down trading principle, okay? The violation of the market environment. What is the current market environment? Taking signal, okay, anyhow, anywhere, which means ignoring key support and resistance level. So you want to know what are your mistakes, what are the mistakes that you are making. So you work on your mistake. That's how you improve. If you are trading and you lose, suppose you have a losing trade, okay, and you get emotional and you forget about it, it's difficult to make progress. You want to go back to that trade and find out why it did not work. Have I misused the technical indicator? Do I know how to use the CCI? Do I know how to use the stochastic? The tool that you are using in the trading system, you must know how to use them. Okay, now enough of my blah, blah, blah. Let's move on. All right, so now these are the key levels that we are watching for the British Pound-Swiss-Franc currency pair, the high, the low, and the median line of 2014, because the price is now near this key level. So now I'm going from the yearly chart, I want to go to the weekly chart, okay? Now you can see my line that I draw. You see how there was a beautiful here, near the green line. So what do we have here on the weekly chart? What is taking place here? What is the current market pattern? Now you see the question that I asked. This is the first question you should ask all the time. What is the current market pattern on this weekly chart? As a swing trader, you want to see it. It's a balanced market or a consolidation. This is what we call horizontal market. The price is oscillating between the turquoise line and the peak line. You see a D below it. When the price D below a consolidation, you see here, it break below it. Traders who are following, I know what I'm going to do now. We project it to the downside, equal side. Okay, let's do it now. See, that's where it stopped. Yes or no? Projection of the top channel. We go below, we project it again. Okay, now let's draw it again. You are looking for oversold and overbought. Trade them around the projected channel. Okay? Now, pay attention to the median line of the last channel here. It's somewhere here. It's also a key level. That's where the price did stop. So the price came out of this channel and then went down to this level. So we project the first channel. Yeah? This is how we detect the overbought and oversold level. The hot spot trading zone using what we call market geometry. The channels. If you want to trade volatile stocks, use market projection, use market geometry. We're talking about the channel, the trending tool, because they are moving very fast. Professionals are trading like this. So first time, that's our first projection. The median line is somewhere here. Second time, you see, again, we project it, the median line here. So when you see it start changing like this, say this is a key levels. I'm interested. It drop it down to a key level. What's going to happen here? I'm monitoring it. I don't assume that you will change direction. But if I receive a bullish signal at a key level for a volatile currency pair like this, I want to buy it also or sell it also. It makes sense? So you see the projection of the channel, how this has helped us to monitor it. So the current market pattern for this currency pair, you see now we don't have any indicator at all. We can use technical indicator. We do use technical indicator. But what are we trading? We are trading the price. So that's why we spend more time on the price. So if you are a new trader, do not just jump into the market and thinking that, okay, hopefully, fingers crossed, leg crossed, arm crossed, everything will work well. Learn to do it, as I'm showing you here. That's what I do care about. So what's happening here? We have okay, all right. So you can see that my green line is not exactly the median line, as I told you, for that 2014 candle. So the median line first should be somewhere in this region, around 149, call it 15000, 15000. All right, somewhere in that region. Okay, the black is somewhere there, quite close to this low of 2008. Okay, so a consolidation is taking place. So price for the resistance here, come down. Now it's again here. So the best place, because a consolidation is taking place, we want to buy at the lower part of the channel and grab our profit here. If you are interested to buy again, we will allow you to go above the green line, break a ball, retest, and then we buy again. All right. All right. It makes sense? So, talking about the tool that we can use also the TS MACD Pro, which is a trending tool that we use on the 4-hour chart. All right. The TS MACD Pro, the way we wrote it is all about the setup. All right. Now, use a trending tool for volatile financial instruments that are moving very fast. Use trending tool. TS MACD Pro, the free trading system that we call the TS2050 is also excellent tool a trader can use to detect what high probability trade setup. The TS MACD Pro and the TS2050 allow traders to identify high probability trade setup. These are not guarantee, okay? Okay? Trading setup, these are high probability trade setup. Okay? So the risk is low and the reward is high. That's what we call the high probability trade setup at the right place at the right time. So for a Pound-Swiss-Franc currency pair, if one is advanced trader, one has the experience, and one wants to trade a volatile, difficult currency pair like the Pound-Swiss-Franc currency pair, one can use a trading tool, especially the channels. So the first thing first, let's summarize this video. What are we looking for? What are the first thing we are looking for? We are looking for high probability trade setup. If you see a setup that is not what we call a high probability trade setup, we walk away. We don't trade it. If you see a signal, a bullish signal that is not on or near a support level, or a resistance that is converted at a support level, or a valid support level, we stay away. We see a bearish signal that is not at a resistance zone or at a support level that has been converted into a resistance zone, okay, we will stay away. All right, it makes sense? We do not want to violate the market pattern, the rising channel, the declining channel, and we want to apply a top-down trading level. If you want to start trading the Pound-Swiss-Franc currency pair, we want to first, the starting point is to identify or highlight, okay, to highlight the key support and resistance level on the yearly chart, best yearly chart. If you do not have the yearly chart, use the quarterly chart. If you have only the monthly chart, I will say to you, shame on you, look for a better trading software. Now, this is to make you, okay, take note about it because it's very important to see the best key level, okay? It makes sense? It is also powerful. This is the end of this video about a currency trader. Talks about how to trade the British pound Swiss franc currency pair. All right. In this video, we were talking about who should trade, all right, the Pound-Swiss-Franc currency pair. Only experienced traders, only professional traders, only advanced traders. Why? Because it's the characteristic of this currency pair. The characteristics are, okay, it's volatile, it's moving very, very fast, so we can lose very fast. We don't want to lose very fast, okay? And one can lose big. We don't want to lose big, all right? That's why only experienced, advanced, and professional traders can trade it. It's very, very, so when you are trading any financial instrument, okay, like the pound yen, or you are trading the euro dollar, you want to know the characteristic of the financial instrument that you are trading. What you are trying to do, you want to become a specialist of that currency pair. You are trading the euro dollar. What is the characteristic of the euro dollar? All right? What are the market indicators that are influencing, okay, the currency pair that you are trading? All right? Who are the people trading it? What are the market participants that are trading it? Okay? Is he trading financial instrument? Okay? Is he a financial instrument that is consolidating all the time? Is he volatile? Okay? You want to know the characteristics of the financial instrument. Now, apart from that, we have also talked about, okay, how do we trade it? Okay, so we know who should trade it. Now, how do we trade it? We are looking for high probability trade setup, and we want to take signal only on or near key levels. We want to use trending tools, channel, moving average, MACD, to trade this currency pair. All right, it makes sense? We must always use a top-down trading method, so we see the setup, wait for the signal, and select a low-risk entry point. This is about multiple time frame trading method or a top-down trading method. I hope you have learned something for this video also, and we put into use, okay, to make excellent trading decision. We are the GSTW24 traders talking about a currency trader talks about how to trade the British pound Swiss franc currency pair. If you like this video, okay, please give us the thumbs up. If you dislike it, make sure you give us the thumbs down. It's very important for me, your feedback, to know whether you like it or dislike it, okay? So this will allow me to improve my recording. And also, if you have any comment, put it below. So you dislike it, put a comment below. George, you were too loud or something like that. All right, so I know why you dislike it, okay? That will help, okay, our recording, okay? If you love it, okay, if you love this video, all right, feel free to share it on Google+, on Twitter, on Facebook, okay, on the social website. If you love what we are doing, Say, George, okay, I like your video. Feel free to subscribe to our channel. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the TSTW24 traders, talking about a currency trader talks about how to trade the British pound Swiss franc currency pair. Speak to you soon.